One of the big reasons that despite all the money printing of the last decade, we haven't seen inflation is a lot of those dollars were exported overseas. What happens when those dollars start coming back? We're starting to see that happen with China and Russia de-dollarizing.
This week's specials with Miles Franklin Precious Metal Investments. 1 ounce Canadian silver maple leafs for only $5.25 over spot. And 1,000 ounce silver bars for only $1.65 over spot per ounce. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today, a new guest, Jim Forsythe. He is a former New Hampshire state senator. He is a U.S. Air Force pilot and a chair of the Citizens for Sound Money. Jim, thank you so much for joining us today.
Well, thanks for having me on. Really appreciate it.
It's great to have you. Now, I first wanted to discuss kind of what first awakened you to this need of sound money and more freedom broadly. I know you were an Air Force pilot and actually you were in the Soviet Union. So can you tell us a little bit about this?
Yeah, so I took Russian in high school, and I went to the Soviet Union in 84 and 86. So I was pre-Air Force. And, studied the Russian system and communism, and just seeing that look of lack of freedom in people's eyes, you can actually see it, really waking me up to why free markets are so powerful, why free markets are so important. That was part of the reasons why I joined the Air Force. And I joke that, I did such a good job, the Soviet Union fell within 2 weeks of me signing up. But sound money, I didn't really understand until I met Dr. Paul in 2007 when he started to run for office, and I heard him speak, and his message of freedom and the need to not go towards the path of communism really resonated with me. But then as I grew to understand what he was talking about, I understood that sound money was the major thing that was needed to obtain freedom. You can't have personal freedom without economic freedom, and without sound money, essentially half of every transaction is the dollar, and that means if that's getting controlled through artificial interest rates or inflation, that you don't have true freedom, and the economic signals are all polluted, which is a big reason we had the 2008 crisis. And, the Austrian economists like himself, Dr. Paul, Peter Schiff, a lot of others, saw that coming because they understood this. And so that's what really woke me up to sound money, and how it was, you can't have all the wars that we have with sound money because you couldn't pay for them. The printing press allows us to have endless war. And so that's, it's really Dr. Paul, and starting to read the Austrian School of Economics, which I hadn't been aware of till then. I'd been only aware of Milton Friedman and the Chicago School. So that's what really woke me up.
When it comes to sound money, you mentioned how, we couldn't have all these wars. We couldn't have these big boom and bust cycles. Your perspective then on why do we have this fiat money system right now?
Well, it all ties back to 1913 when they passed the Federal Reserve Act. And I definitely highly recommend people read The Creature from Jekyll Island by Griffiths. Really good book that talks about that. But so with the creation of the Federal Reserve, a central bank, which had been tried twice in our country's history, and that was the whole argument between Hamilton and Jefferson. So before you deposit your gold in the bank, you'd get a note for it because you don't want to carry your gold around, and then you could redeem that and get your gold back. And, you had all local banks, state banks, and, some of them would go crazy with lending. They'd go bankrupt. And the competition between banks kept everybody relatively honest. Well, the Federal Reserve comes in and backstops all the banking system. And now you can have banks taking more and more risks. The leverage ratios got higher and higher. And that's the start of the boom bust cycles. The big one was the Roaring '20s, right? That was a massive expansion in credit that was possible because of the creation of the Federal Reserve. And then when that busted, you had the Great Depression. And that's where the delinkage started, is with FDR confiscating gold. And at that time, the dollar was backed by gold, so people didn't think of it as confiscation. So they gave it up willingly and got the dollars back. And then he immediately, changed the price to $20 to $35, overnight. So then you get to the Bretton Woods system in 44, which is where we became the world reserve currency because we had most of the gold. But the dollar was still backed by gold and redeemable, but only by foreign countries. And then you get to the Vietnam War and the massive spending that went on for the Great Society, and they were printing more dollars than there was gold, and the foreign countries were waking up to this until de Gaulle basically called the U.S. out on it, saying, you guys got to stop this, and countries were starting to redeem, and then that's when Nixon took us off the gold window. So it really all ties back to the creation of the Federal Reserve, and it's been a slippery slope ever since then. But when you get a central bank like that, and then the cooperation of the government, where the government uses the central bank to overspend, create massive deficits, and get them to print more and more money without backing, and then eventually people figure it out and say, there's not enough gold to back the dollar, and then they just shut it off. It became pure fiat. And the thing I would emphasize to people is, this has happened throughout history, thousands and thousands of times, and every attempt at a pure paper currency has collapsed, and I don't expect this to be different. I would say it's gone on longer than historically. Usually, it's about 30 years before a collapse. It's gone on longer because essentially we did have backing through the petrodollar. Nixon convinced major oil producers to only accept dollars for oil, but you see that's breaking down now. Russia and China are trading without the dollar. They're trading in yuan. And then Russia can buy goods from China, and then any excess surplus they can use to go buy gold on the Shanghai Exchange. So indirectly, gold is now back to being used by major countries to buy oil, and that's putting cracks into the whole petrodollar system.
I know we've kind of been talking about this for many years regarding, yes, fiat currencies eventually collapse, right? Some people who are watching might be like, well, when is this going to happen? And it seems like it's been going on for a while. We're finally this year starting to see inflation tick up, but it's not as bad as it was in the 80s. It's still lower than that. So your perspective on kind of when you see this all playing out?
I wouldn't have a firm timeline. I mean, some of the smart people I listen to are thinking it's within years versus within decades. And I would agree with that. The thing that's bringing things to the head is if you look at the spending, right? So unlike 2008, Social Security now, back then, Social Security was in a surplus. Now it's in a deficit. So in other words, we're spending more on Social Security than we're bringing in. If you take the interest on the debt plus Social Security plus defense, we're always going to be in a deficit, and that's reached a tipping point. Debt to GDP is 130%, I think now, and so it becomes impossible to kind of turn things back. And the only way you can turn it back is what they did in the 40s, which is artificially keep interest rates low and create enough inflation so that the debt to GDP shrinks. So bondholders, we expect to really take it on the chin, money market, cash positions. Whether or not we get, hyperinflation is technically 50% a month. Are we going to get that? I kind of doubt it, because as the world reserve currency, if we start to go down that path, there's going to be a big outroar to change things and back the dollar by gold again, or come up with some sort of monetary reset to solve it. So I don't think it will get that bad. But even right now, if the official inflation is like 6.5%, shadow stats I trust a lot more, and that says about 13%, which makes sense because we're printing about 13% more dollars per year. That's not horrendous. It's pretty bad. I mean, if you were to go buy a stock and you knew that it was going to go down 13% when you buy it, of course not. So why is anybody holding dollars? The debt is being paid for with dollar and treasury holders right now. One of the big reasons that despite all the money printing of the last decade, we haven't seen inflation is a lot of those dollars were exported overseas. What happens when those dollars start coming back? That's another trigger for inflation. And, I think we're starting to see that happen with China and Russia de-dollarizing.
I know you have an effort, the Citizens for Sound Money, to really make sound money, gold and silver money again, right? And have it be used as currency. But what are your perspectives on what governments are going to do once these fiat currencies start collapsing?
Well, you can look at what they are doing, which is, China, Russia, Poland, number of countries are increasing their gold holdings. So I think many countries are preparing for it by increasing their gold holdings. And I think, the Basel III agreement was a recognition of that. I don't think they want that to happen. They want to be able to continue to print. They don't want to back the currency. But I think if push comes to shove and they have to, then they potentially will. But they're not going to do it until things get bad. And do you want to wait for that? And that's our big effort with Citizens for Sound Money is, governments didn't decide that gold was money. People did, and that it arose naturally from people doing trade and coming up with something that was compact, kept its value, and can be used as a medium of exchange and store of value. So governments didn't do that. The people did. The government then messed it up, right? And I'm not waiting on the government to have a solution. I am urging people to, solve this on their own by adopting sound money. And with the invention of the blockchain via Bitcoin, there's great ways to do that now. To have, instead of a paper note, we're not going to carry gold and silver around too much for cash transactions, especially gold. But you can do it now with the blockchain. So gold and silver is sound money. Crypto, there's a lot of debate about crypto, whether or not that will have a role. I think, Bitcoin and Ethereum are speculative bets that it will. And it makes sense to have perhaps some allocation to that if it does really, become a currency, and it has, and, Bitcoin has in some countries. But gold and silver are definitely the time-tested ways. And by adding blockchain to gold and silver, you get most of the major advantages that crypto gives you.
Now, how does that work with like a gold and silver-backed cryptocurrency?
So the one we're heavily involved with and using personally for the nonprofit is Kinesis. There are other systems like Load and Cash. And as far as we're concerned, as long as these systems are honest, we're supportive. We don't really want just one player in the space because you want to keep them honest, and competition, free market competition is the way to do that. But yeah, the way it works for Kinesis is it's 1-to-1, so it's audited twice a year, and so there's the same number of tokens as there are ounces, and it's also redeemable, which I think it has to be a key feature of any sort of asset. We call them asset-backed digital currencies. It has to be a feature, otherwise, you can't test it, right? Redeemability is the best way to test a system. If they're honest and it's 1-to-1, they won't have any problems doing redemptions. So Kinesis, you can redeem since they do 100-ounce and 1 kilo bars for silver. It's a 200-ounce minimum redemption for gold. It's 100 grams. And a number of us have tested that out, and it does work. It's actually a pretty cheap way to get silver. In fact, for me, it was, back when premiums had blown out, I was able to redeem 200-ounce bars for 8.17% above spot, total cost, including shipping. The interesting thing about Kinesis is, whenever you have a transaction, it has fees associated with it, 0.22% for exchanges, 0.45% for sending. Those fees go into a fee pool, and holders wind up getting 15% of that fee pool. So silver's had like a 0.2 to 0.4% annualized yield. Gold for the last year was about 7%. But I don't think it's going to settle that high. There was a lot of activity on the exchange this year for other reasons. But getting a 1 to 2% yield is reasonable, and that's what it's been about 1% recently. And it really is exciting because you look at the gold versus bond yield correlation that's been true over the years. It was always gold doesn't pay a yield, and therefore people will switch to bonds when it's paying a good enough yield. But with gold and silver paying a yield, that really opens up a new paradigm.
Now, many people would argue that it seems like when governments have a fiat monetary system, they don't want to give that up, right? That ability to just create currency out of thin air. It's easier to do that than to tax the population. So why would we move back to any sort of sound money system? Won't the government outlaw those kinds of systems?
Like I said, I don't think the government wants to. I think they might if they have to. But it's also possible that they do it as a free floating exchange. There's a lot of suspicion that's what China's planning on, where they can continue to print. But with the Shanghai exchange, you could still, as long as you can still trade it for some real asset, that will encourage. People won't want to hold it, and at that point, it won't be money; it'll just be a currency. But that way, they can still print. But the big mistake, and there's a faction that basically says we don't want them to back the currency. There's a difference between a currency versus a store of value, and when the government gets involved, they're going to mess it up. So the mistake most people make is thinking that the dollar is money, it's a store of value, and it's not. So there's nothing wrong with spending in a currency, but then saving, you want to save in a store of value, save in sound money.
This is very key. And I think that's one of the things we can do even right now when we're in this fiat monetary system. Many people have talked about becoming your own central bank and holding precious metals. And at that point, you regain a little bit of that freedom.
Yeah, absolutely. And there's a lot of people that get it and they're stackers, right? But I don't think that's sufficient. We need to be using it. People say, why, I bought a grill with my silver. People are like, why'd you sell your silver? I was like, because I don't have any dollars. Why do you have dollars? Right. And systems like Kinesis allow you to do that. They should be coming out with a replacement debit card soon where you have your gold and silver. And if you swipe your card, it'll sell a little bit of gold to silver to settle the transaction. So you're in dollars for just, a very minimal amount of time. So you're still using dollars as currency, but you're not saving in dollars.
In your experience, how do you talk to people who really are unaware about sound money? That sound money is the way to go. How do you convince them of that?
I mean, what I tend to do is, ask people, what do you think about all the spending? And they're like, well, yeah, it's crazy. It's like, well, how are they going to pay for it? And typically they say, well, it's going to be on our children, et cetera. It's like, no, that's not true. It's going to be on you. And the way they're going to pay for it is, by inflating the currency, all your cash holdings are going to lose value. And now it's pretty easy to have this conversation. The conversation's been hard the last decade, but it's gotten very, very easy now because people are starting to see the inflation. They understand how much we're spending and how crazy it is. And you just got to ask them, how are they paying for that? Well, they're paying for it by inflating away the value of your dollars. So you want to get out of dollars and get things. It doesn't have to be gold and silver, but get things of real value. I mean, I was renting for a long time, and we started to see this coming, and we said, I think it's time to buy a house. And we bought a house, and interest rates spiked. We renegotiated a different loan 2 or 3 times. And bought a house right as COVID was coming online, and houses price hadn't spiked up that much. But if 6% inflation and we're 2.25% loan, that's free money at this point.
And when it comes to gold versus silver, your perspective on that and what might be used more in the future. Some people have talked about gold being a more monetary metal, at least it's seen right now as a more monetary metal. But historically, silver has been used more as money than gold. So your perspective on that?
Yeah, I tell people I hold gold because central banks do. I hold silver because they don't. So silver traditionally has been kind of the people's money because it's more compact and portable. Well, not compact. It's you can have a smaller denomination, right? A 1 ounce silver coin for $25 versus $2,000. Same reason penny, they made pennies out of copper. So that's traditionally been why silver has been the people's money. You can do small transactions with it. Once you go to the blockchain, that kind of removes that advantage. It becomes less necessary. But the thing I like about silver is gold. It can be used in industry, but it's so expensive that instead people use silver for electronics, right? And so silver has a real anchor to it because of the industrial use. And so that's why I'm way more heavy into silver these days. The gold silver ratio is super high. And I think it's super high because central banks have been buying gold. But as we move forward and more people start using silver as money, plus with the supply deficits that we have anyway for industrial use, I expect silver to outperform. And I definitely like that it has that industrial aspect so that it creates an anchor on the price.
When it comes to people investing in precious metals and holding precious metals, you can have the physical metal and you can also have, the gold and silver backed cryptocurrencies. So in your perspective, what is maybe a good balance in your mind?
I think that's a personal decision. What I will say is that having zero physical on hand is a mistake. I think everybody should have some physical on hand. I definitely like small denomination silver, so 1 ounce coins, but even better, junk silver, the old dimes. And that's the conspiracy theory, all hell breaks loose, power grid off, you have something that you can trade with other people. But then the flip side of that is, any physical in your home is subject to theft, risk of theft. For somebody like myself, who people, know who I am and what I believe in, I don't hold a lot of silver and gold at home because, I figure my theft risk is probably higher than the average person. And then in asset-backed currencies, or, I like Sprott's PSLV and PHYS as well. They're highly liquid with low spreads. So those are good as well. Plus it diversifies your counterparty risk by having some of that in addition to, an asset-backed digital currency. So again, it depends on your risk tolerance. And then there's miners versus gold and silver. And I look at gold and silver as it's going to hold its purchasing power. It's not there to make you money. It's there to protect the money that you already have earned. That being said, if they are more widely adopted as money, they will increase in value in purchasing power. So that's partly speculative, but for getting more, for increasing your wealth, that's where the gold and silver mining stocks come in.
Fantastic. Well, Jim, we really appreciate your time today. And before we let you go, did you want to share with the viewers where they can find you online and any last thoughts you'd like to add?
Sure. Yeah, we're at Citizens for Sound Money with the number 4 rather than spelled out. So citizensforsoundmoney.org. At Jim Forsythe 5 and at For Sound Money with the number 4 on Twitter. We're excited. We just reached out to the author of The Illusion of Money, a kid's book that really is a great description of the problems that we're in right now. I recommend it for adults as well. We'll have that on our website for sale because we managed to get in just in the nick of time to get a bunch of copies that we can provide to people.
All right, Jim Forsythe, once again, thank you so much for your time and God bless.
Thank you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.